You want to go ahead and start the recording for us?
Yep, we're all started.
Thank you. All right, welcome everybody. My name is Mark Garst. I'm a lobbyist with the League of Oregon Cities, and my area of specialization is tax, finance, and economic development. And today you've joined us for a informational call on the American Rescue Plan fiscal recovery funds for cities. I know we had a conflict. I know that the NLC is doing a call right now on the same topic, and they had Treasury on their call. So I am really honored that you guys decided to join us. Both this call and the NLC call will be recorded. And so you'll certainly have an opportunity. We'll post a link on our website, and you'll have the ability to go in and watch that NLC call after the fact. I know I'll certainly be looking to check that out here in the next day or two. So as always, if you could mute your microphone. If you're not actively asking a question, that'll kind of keep feedback and other noises and kind of improve the video and audio quality rather on the call. If you do want to jump in with questions, we're going to have a dedicated question period at the end, and some questions have been submitted in advance, and we'll certainly be starting off with those. And then, but I do want to get to some of your questions. So we do have a hard stop at 3 o'clock, and so we will do our best to get through all of the material relatively quickly and save some time for questions. So a couple of folks that I wanted to introduce. First of all, we have Jim McCauley, who's our legislative director at the League of Oregon Cities. And then we have Colton Toteland, who is one of our attorneys on our legal team. Jim, obviously very engaged in this process from the beginning. And Colton is going to be doing some work for us over the course of administering this significant resource that's going to be coming to Oregon Cities. And so, Colton, do you want to say hi real quick? Just kind of let people see who you are.
Yeah, hi everyone. My name is Colton Toteland. I'm honors attorney here at League of Oregon Cities. I'm going to be working with Mark to answer questions about ARPA and the final rule from the Treasury guidance. If any of you have spoken with Jamie, Patty, or I in Legal Research Department, you know that we always say we cannot provide a direct, formal legal advice, but my goal is to connect cities with the relevant language under the statute and regulation and help them reach their own conclusion. So that's my role here.
Great, appreciate that. And then Jim, did you want to kind of get us kicked off here and share a little bit about the program and give folks some ideas that they might think about for as they kind of try and prioritize spending?
Yeah, happy to, Mark. Thank you very much. And again, I appreciate everybody taking the time today to join us on this webinar, and it's probably not going to be the last one. I think as we found within this whole ARPA process, there are details, and we're going to find out more as folks start digging through this and probably get some questions answered. That's one of the big roles that National League of Cities is helping out with, and why they're connected pretty detailed with Treasury and things of that nature. So you're going to have to bear with us. This is kind of what we know today, and there will be questions, I suspect, and we're going to do our very best to try to get things answered. I think the best thing going forward with ARPA is you've got until 2024 to spend this money, and you're going to be getting it in two tranches. Those of you who are in that 50,000 population plus may have already received at least half of that first allocation. Those of you in a smaller population center of the state of Oregon has another, I'll say, probably 2 to 3 weeks or so before they need to start making that distribution into those smaller communities. But I think that timeline is helpful for you because you can at least make a concerted effort to make sure that you do a kind of a thorough assessment of what you should be looking at for spending the money. And your lobby team and LOC, we have been advocating for quite some time with the legislature, with the governor's office, to make sure that there's some opportunity out there to try to leverage some funds. Collectively, cities and counties are receiving just under $1.5 billion over the next 2 years. And that's a huge amount of money that we've never seen before from the feds. It provides some opportunities to maybe partner with the state on some or some other cities or even the counties on some truly generational type projects, especially those that are related to the water quality and sewer projects and things of that nature. So as we kind of go through this process, we're hopefully going to be able to convince the legislature to look at a structured process that you can help partner with. We haven't had any word back on any kind of a formal commitment at this point in time, but we're going to do our best to make sure that we provide you with every piece of updated information that we end up getting in the process. And as Mark said, as well as Colton, they're kind of the go-to for questions on this. So with that, I'll turn it over to the experts, our version of U.S. Treasury here going forward.
All right, thanks, Jim.
Yep.
So we do have a PowerPoint today, and you may want to adjust the view on your screen to make that PowerPoint a little bit larger. So you can go into presenter mode, a side-by-side mode. I think that's going to be in the top right of your screen. I think my screen looks a little bit different as a presenter, but you may want to do that if you want to get the font up a little bit on the PowerPoint. All right, so starting off, how much money are we talking about? So total state funds to Oregon is $4.26 billion, and that's split up between the state, counties, and cities. The state's getting $2.6 billion. We know that they're going to use some of those funds for revenue backfill. There was we just had a great revenue forecast yesterday, but there's a concern there that revenues have not increased to the point that they would need to support the current service level at the state. And so we think that some of this money will go into just keeping current service level at your state agencies. They want to hold some back for reserves and spend it down the road, right? We have until, we'll talk about it, but 2024, 2026 to actually use this money. So some of it will be used for reserves. They've already sent out money. You probably heard from your legislators looking for projects. 240 million of it got split up by Oregon Senate District. The senator got a share, and then each of the representatives got half what the senator had gotten. And so there's a list of projects that have been developed there. They're going to look at how those fit into the guidance. And I expect that we'll see something along the lines of what we always call the Christmas tree bill here at the end of session, where a lot of those projects will end up getting approved. There's an additional 155 million that the state has that's dedicated to capital projects. We haven't heard much conversation about how that money is going to get spent. So that's something that we're certainly keeping our eye on. That could be helpful as we look to develop infrastructure. I don't know exactly what else the state might have in mind for that money. That dedicated pool, they haven't really said anything. Counties, 818 million. And then cities get 680.7 million. And it's kind of broken out between what they call metropolitan cities in the guidance. Those are generally cities over 50,000, but there are some exceptions. Mighty Lebanon got pulled up into the metropolitan city category, and you may be asking, how the heck could that be? Well, apparently they have poverty levels such that they would have qualified as a CDBG entitlement city at one point, and they chose not to do that, but it ended up, they got pulled up into that list. So they'll be getting, along with all the metropolitan cities, generally 50,000 and up, they'll be getting their money directly from Treasury. And those cities will get 438 million, and then the non-metro cities will get 243 million. So kind of one thing I want to say about this program, just right out of the gate, it's not the CRF program, right? A lot of you are familiar with the coronavirus relief funds, the money that we've been trying to spend down here over the last year and a half. Unlike CRF, this is not a reimbursement program, right? So you will get the funds up front, and then you will do reporting on the backside. On CRF, you had to spend your own money and then ask for reimbursement. That's not how this works. You get the money up front, and then you will spend the money and do some reporting. We'll talk about that in just a second. Again, larger cities, 50 and up generally, will get their money directly from Treasury. But the state, unlike CRF, where we had some issues getting what we knew was our fair share based off of the intent of that legislation, and there was some language that the state should give us a certain percentage. Here it is the bill says that the state they shall pass through this money to smaller cities. So there's not really any ability for the state to choose to hold back some of those funds. And also the state doesn't have the ability to restrict those funds. The guidance specifically prohibits them from putting any restrictions on how you use this money aside from what is in the ARPA Act, the American Rescue Plan Act itself, and the and in the Treasury guidance. So those are great news. We had some concerns with that program, CRF program, and should not be repeating those issues. Next up, how do you get your money? I get these questions all the time, so I'm just going to hit this first. So again, metro cities, generally 50,000 and up, you will get your funds directly from Treasury. You can already apply. And we know that a lot of those cities have already received, they applied, and within less than a week, they had already received 50% of the money that they were allocated. The allocation for those larger cities is available on the Treasury website. This PowerPoint will go out. It'll be a document that you'll be able to get off of the LOC website, and it has some hyperlinks in it. And so there's a link that you can click on right there, underlined in blue, that says where on the Treasury website you would go if you want to see the allocation for those metropolitan cities, again, including mighty Lebanon somehow. Smaller cities will receive your funds through the state, but again, like we talked about, it's a pass-through and the state doesn't have a lot of authority to hold back. There is a requirement that the grant not be larger than 75% of your budget, and we've run some tests. We don't think that that's going to actually hit any city. We've looked at cities that don't do police and fire. We've looked at cities that do not levy a property tax, and we've yet to find a city that would actually be limited based off of that 75%. But who knows? We'll see. There could be an exception there.
Mark, can I interject for a second?
Sure.
I just want to add that yeah, none of the cities even came close to that 75% amount. As regards to the state's role in distributing the funds, they can request an extension on the distribution. So it may be later than mid-June if they go through that process, but the extension will only be for another 30 days. So just keep that in mind.
Yeah, appreciate that. And, and we'll see whether they do. I've asked the question of the state, are you planning to ask for an extension? So far I've heard no, but they also can't tell me what the process is for small cities. And so they're scrambling, I know, and it could come to the point where they actually are not able to get this out like we hope in mid-June. And like Colton said, they would get a 30-day extension. So you'll get 50% then, and then you'll get 50% 12 months later. We don't have the actual allocation numbers for how much you'll get. You've probably seen some numbers. Those were preliminary numbers that were generated by one of the committees in Congress when they were building the bill. And so those are, I think, pretty reliable, but Treasury will put out the final numbers soon. And we know that when we did the metropolitan cities, there were some surprises. There were some changes from what the committee had put. Hopefully, we don't see those kinds of big swings. But don't count your chickens yet, I guess is what we're saying. So as soon as we get those final allocations, we'll post to the LOC website, but you can always keep your eye on the Treasury website. There's going to be a link at the end of this presentation, and really that's the go-to. So let's talk now about what are the requirements for spending the funds. First of all, we do not have all the answers today. NLC is still asking questions of Treasury, and we expect that there's going to be supplemental guidance that'll come out similar to what we saw on the CRF. So this is going to be something that we're going to learn about over time, and it's going to be kind of an iterative process. If you recall on CRF, there was some advice that came out on how you could do for payroll, and then the Treasury reversed themselves, and then there was kind of some internal squabbles at Treasury, and they ended up coming to a point that was favorable to cities. But keep your eye on those developments, and certainly we'll be reporting on those in the bulletin, among other places. So the Treasury has issued some documents already. They have what's called their preliminary final rule. This is a 150-page document. It has got some great information in it. It is available. Again, we'll have the link. It's available on the Treasury website. And the way it's organized is it includes kind of background. It includes some specific guidance on various aspects of these funds. And then at the end, it has what's actually the final rule. And the final rule is relatively short. It's like 15 pages. Most of the material, though, is in the front end of that document. And that really is what, unfortunately, whoever your city is responsible for this program, you're going to have to read it. And it took me a few days. It'll take you a few days, but it's a good read, and it will give you a lot of good ideas on how you can spend the money. Now, I don't have time to do that. Where can I get kind of the nitty gritty? They have an FAQ document. That's more like frequently asked questions, 18 pages, and that really hits some of the high level, highest importance items from the actual interim final rule. And so if I were you, I would start there. And if you read that 18-page document, you're going to have a pretty good flavor for what we're looking at on this program. They additionally have a fax sheet. It's a little thin, but it does include like specific examples of projects that you can do. And so it's helpful in that regard, but it doesn't really give much detail, and it doesn't really cover the limitations as well as some of the other documents. So this PowerPoint again is going to be available to you with all the links to this document. As we go through some of the guidance, you're going to be like, well, where did he find that in the guidance? My goal is to go back and insert page numbers after some of these items that we talk about, but it made the presentation way too cluttered for today. But when we post it up on the website, my goal is to have page numbers on there. So the interim final rule sets the criteria, and then the FAQ kind of gives some plain language explanations of what you may and may not do. You're going to hear this, I'm sure, a few times on this call today. Work with your attorney, right? Like Colton said, LOC, we can't give legal advice. I will certainly point you towards where I've seen the issue that you're talking about in the guidance. I'll describe what the guidance says, but ultimately this is something for you guys to think about internally. And then if you have a question that you just feel like you don't have the answer to, and you're not satisfied based off of the plain language in the rule, then you'll need to work with counsel on this. And we think that is probably going to be something that you can claim as an administrative expense one way or the other. And we'll talk about that a little bit more as we go along. So how long do I have to use this money? So unlike the CRF, if you recall, the CRF said that the funds had to be actually spent by the deadline, right? So the term in the act is incurred, and Treasury is taking a more favorable read this time as to what incurred means. They're saying it means that the funds have to be obligated. And so while you have to obligate all of the funds, maybe you have to sign a contract. Maybe you have to agree to have given a grant award, whatever it is. You have to get that done by December 31 of 2024, but then you have an additional 2 years to actually get that money out the door. So if you have an infrastructure project, you sign those contracts, you've got that money obligated, that's going to be good enough. And then you can finish that project by the December 31st of 2026. So that is a really favorable read. We're not in a huge rush here. The legislature wants to spend this money tomorrow, their share, but I think that you guys, can be thoughtful. Obviously, there are some pressing needs that are out there. You're going to want to get some of this money out the door, but you've got some time on some of it. You're not going to get the second half for a year. So be thoughtful. Think about investments that'll pay off for your city down the road. Think about investments that'll, that will maybe create the ability for, long-term business growth down the road or whatever it is. So, you've got some time. One thing, the CRF allowed you to go back to the beginning of the pandemic. That was great. This money does not that way, right? This is only go forward. So you can only spend these for costs that are after the date of enactment of the bill, which is March 3rd, 2021. So that's a difference that's less favorable than the coronavirus relief funds. And so it's only go forward costs March 3rd on. There are some requirements that you're going to want to think about. Record keeping, you want to keep good records. You're going to have to do reporting. Metro cities are going to be doing it quarterly, smaller cities annually, and then Portland will have some other requirements as one of the largest cities. Metro cities, 50,000 and up, you're looking August 31st. Smaller cities, October 31st is going to be your first report. So I would already start thinking about that. And there are details in the guidance on what those reports might look like, but it also says we're going to give you more detail on what it looks like. Overall, if you participate in the coronavirus relief fund, I think it's going to be very similar in that you report your spending into buckets, not a ton of detail. But as you go through the guidance, you'll see different things, infrastructure. They're going to want to have a little bit more detail on what what you did to ensure the like prevailing wage workforce kind of stuff. On some of those things that are targeting low income people, they might need a little bit more guidance. So that is something to keep an eye on. All right. there's an audit, function here that could happen. You could certainly get audited. This is subject to the Single Audit Act. And, and then finally, you can share this money with nonprofits. You can share it with other jurisdictions, your county. You can even share it with the state. I don't know if anybody will, but you're on the hook generally if you share, with a nonprofit, non-governmental entity. You're on the hook to make sure that they follow the Treasury guidance. So something to think about there. All right. So what are kind of the big things that that you're allowed to spend the money on? Public health, negative economic impacts, premium pay for eligible workers, government services to the extent that there was a reduction of revenue, and water, sewer, broadband infrastructure. Those are kind of the high level items, and we're going to kind of go through and unpack those. So starting off on public health, the rule, you'll see it says again and again, these are non-exclusive lists of things that you might do. So it gives you lots of ideas, but there are other things that you could do that kind of fall into that category. And but they are going to have to be related to COVID, right? And they're going to have to address whatever need COVID has created. And so you'll want to write up a justification if you do something that's not just, clear as day. I would just plan to write up justifications, short. It probably doesn't have to be, so extensive, but you're going to want to justify, this is what we were thinking about. This is how we saw the problem was caused by COVID or exacerbated by COVID. This is how we decide to address the problem. And you'll have that to justify how you choose to spend it. So I pulled out some of the many uses that are listed that I thought might be most applicable to cities. Support for quarantine or health access. I know some cities had rent out hotel rooms for homeless people. Enforcement of or communication of health orders. Certainly, we're doing some of that. Capital investments like ventilation, glass, spacing. That could be at your building. It could be at another building. But those would be eligible uses. And then behavioral health, including addiction treatment. I know a lot of cities are focused on behavioral health. And so that is called out as a public health need that has been deemed to be exacerbated by COVID. And so that is, you're in pretty safe ground there. You can do payroll, but it's way more limited than CRF. If you recall on CRF, you could basically claim all of your fire or police payroll. That's not the case now. Unless it's a dedicated unit that is dedicated to dealing with COVID, then you're going to have to, allocate the time out. You can't claim 100% of somebody's payroll, even if they are a cop or a firefighter. So that's a big change from the CRF. Couple different places in the guidance on assistance to individuals. It gives additional programs that are allowed inside a qualified census tract. And these are census tracts that the Census Department has determined are kind of low income. And so you can do additional things to help out those lower income folks who, again, have been deemed to be disproportionately affected by the pandemic. And so some of the examples under public health are community health workers and benefit navigators, housing services, and there's more on this later, lead paint remediation, violence intervention programs. You may be thinking, lead paint, what the heck does that have to do with COVID? Well, kids are at home a lot more. And I guess they're a lot more likely to, chew on the windows or whatever they do. And so that was deemed to be COVID related, which kind of makes sense when you think about it. They're home more, they're more exposed to lead in the household. And so lead paint remediation is a qualified use in these qualified census tracts. Now, you can also do lead paint remediation outside of a qualified census tract, but you're going to have to do a lot more justification. You're going to have to say, oh, well, this tract is actually kind of high income, but there's a certain part here where we know we've got some really low income folks disproportionately affected by COVID, have some lead issues. And so even though it's not in a qualified census tract, we still feel like they're disproportionately affected. And we want to do one of these extra uses of the money. And that's totally possible. And the guidance talks about how you can do that. So that's public health. Next up, economic support, right? Lots of uses here for economic support. In cities, I mean, gosh, we were on the front line of responding to the economic effects of the pandemic, right? So many business assistance programs, so many different ways that folks tried to help out Main Street businesses. And there are certainly a lot of allowed uses along those lines in the guidance. So it's only eligible if it addresses an economic harm resulting from or exacerbated by COVID, and it has to be proportional to the harm experienced. So you got to think big. And when you read this guidance, you're going to see what I'm saying. On CRF, if you had said, hey, we've got some folks who are unemployed because of COVID, I want to help them out, I would have said, okay, well, as long as they became unemployed after COVID hit, then that counts. Here they say, no, Mark was wrong on that. Actually, maybe they were unemployed before, but they stayed unemployed because COVID made it harder to get a job. So actually, it wasn't necessarily, their unemployment was not caused by COVID, but it was exacerbated by it. And so that's good enough. And you're going to see lots of examples of that through the guidance where the uses are kind of follow along effects of COVID, and then you're still able to justify that spending. So there's a presumption that that folks who are affected by unemployment, food or housing insecurity, or lower moderate income folks are COVID impacted. And so you have a lot of leeway there with what you can do. Some of the examples are assistance to the unemployed, food, rent, mortgage, or utility assistance, which is a big one for us. We have a lot of folks who have gotten behind on their utility bills since COVID hit. Counseling or legal aid to keep folks housed, and cash assistance. Now, cash assistance, again, goes back to this, it has to be proportional to the harm experienced, right? And so, it needs to be folks who are maybe low income, right? First of all, they need to be affected by COVID. But then when it says, when you're thinking proportional to the impact, it says in the guidance, you might look to how much the federal checks were, right? The checks that folks receive from the federal government, the COVID rebate or whatever they called it. You might look to how big those were to make sure that you're being proportional to the impact. Or you could try and measure their loss and respond to their exact loss. That might be another way to do it if you were doing cash assistance. So, so again, that guidance is in there, and it's worth a read if you are starting to go kind of down that road. Again, we have this qualified census tract language. So economic support for individuals inside a qualified census tract, you can do homeless services, and it could be that so you can do homeless services, you can do affordable housing developments, housing vouchers, counseling, navigation. Services to address educational disparities, and they call out like early learning, and they call out a number of other things that you might do to help kids. And then other children's services like childcare, home visits, foster kid support, and parent training. So again, these are presumed to be fine if they're inside a qualified census tract, or if they are targeting people who live in that census tract. So maybe you have the facility right outside the census tract, but the customers of that facility are coming from a qualified census tract, that counts. And then again, you might look at other, maybe it's not in a qualified census tract, but you know that folks are disproportionately impacted. And the guidance talks a lot about equity, and it talks a lot about, how BIPOC communities were disproportionately affected. Black, Indigenous, people of color were disproportionately affected by the pandemic. And so, you are able to help out those communities in particular, low income communities, again, disproportionately affected, and you're able to do extra things for them. So that is economic support for individuals. We have guidance on economic support for small businesses and nonprofits. I'm gonna make sure I'm not missing any of my notes here. All right, and so economic support for small business and nonprofits. Again, this was a lot of cities, this was their bread and butter on the CRF programs, was to try and keep businesses alive. I can't remember how many times I said at the legislature, it's obvious that our city leaders just want to make sure that these folks have a job to go back to when the pandemic's over. And you guys really stood up, and I expect that we'll see a lot of that kind of going forward to whatever extent it's still necessary in your community. So again, only eligible if it addresses an economic harm resulting from or exacerbated by COVID, and it needs to be proportional. You can consider things like lost revenues, financial insecurity. So, it could be that business is just, they're not well banked. They don't have the ability to go out and borrow. That could be a reason that justifies that you guys need to give them some help. You can look at the fact that they were closed down for a while, and that can demonstrate that they have a need. And then you can look at disadvantaged communities again. Historically, BIPOC businesses have a harder issue getting banked sometimes and being able to access credit. And so you could look at that issue if you wanted to kind of dig in a little bit. and they identify some uses. And again, I've kind of pulled out the ones that I think you're most likely to use, but I might be wrong. You might see something else in that list and think, oh, that's exactly what I want to do. So, you'll have to read the guidance to get the full picture, but some of the things that it calls out are loans or grants for payroll and other operating costs. And again, it's not limited to payroll and other operating costs. I think that it's including but not limited to. So you probably could do it just to make up for lost revenue at those businesses if you wanted to look at that. Loans or grants for COVID mitigation, like it says plant changes, it's plant changes. So maybe they needed to space out their workers at that business, and there's some cost associated with that. You can help them out with that. If they want to put up glass, obviously, at the businesses, if they are doing extra cleaning, if they want to set up a vaccination, if maybe this has been a hotspot and you guys want to, work with, the county and local health providers and get a vaccination clinic out at one of these facilities that you think is driving COVID in your town, possible, you can do that. So that's an allowed use under the economic support category. So one thing that I will note, we had a couple cities, I think most cities generally were kind of reporting on, how they were spending this money really good. The guidance really emphasizes here that when you're giving money to the private sector in particular, you really need to keep documentation, and you need to, that has to be accessible to folks to see who got the money in your community. I think there's some concern that, with local leaders being so close to the business community, something untoward could happen. I don't think that really has actually been a real issue, but certainly I think that how you spend this money is public information. Now, it applies to private sector again. I don't think that applies to the individuals, and so. But when you're doing with support for businesses, I think that the assumption should be that information is public information. I have a question about how the loans, what happens when the loans get repaid? Do you have to take that money and then pop it into another eligible use of the funds? If you remember on the CRF, not many people did loan programs because when the loan got paid back, if it got paid back after the end of the use period for the CRF, you had to send it back to the US Treasury. You had to give them that money back when the loan was repaid. We don't have any guidance on that yet. There's nothing in here, but that is something, before I set up a loan program, I would want to understand what happens when the money comes back. Will I get the money back in time that I can then deploy it to another use? Or is it going to come back at some point and I'm going to have to send it to the federal government? And if so, I don't know why you would. I would just do a grant rather than a loan, but that's me. So there are, in the actual act itself, the hospitality industry, tourism, was called out as an industry that was that needed some extra help. And so the guidance talks a little bit about what that industry, what that help for that tourism, travel, and hospitality industry could look like. And it's pretty broad what you can do with it. So it includes not just support for businesses, but also attractions or business districts. And so I think it'll be interesting to see how some of that plays out. Maybe you are going to do some spending to push tourism into your tourism district, and maybe that's an allowed use. Maybe you want to do some improvements to that area to make it easier to do spacing, or to make to deal with the health effects of the pandemic, and make tourism travel feel safer. Maybe something like that would be allowed. It says that you can spend this money on facilities that were delayed due to the pandemic, which is interesting. And then some of the other uses that we've heard about before, ventilation, barriers, PPE, that kind of stuff is also called out as being allowed use for for people in these industries. Now, it also says that you can kind of take a similar tack on other industries, but that they have to be affected to a similar degree as what tourism was. So maybe we know it's not true. Wood products seems to be doing great right now, right? With everybody trying to do all their Home Depot projects, but say that, you felt like that industry had been, disproportionately impacted by the pandemic. And you would need to look at kind of what were the losses in travel and tourism, and are the losses in this other industry that you want to look at similar? And so, and it gives numbers in there. I don't quote me, but I think it was like 24% loss in receipts on tourism generally. And so, does the industry that you want to target have something similar there? I don't necessarily know what the advantage is to going this route instead of just the regular business assistance. Maybe that the regular business assistance is more targeted to small businesses, but I haven't actually seen a definition of small businesses. But again, this is another path, basically, that you can do some economic support for folks. All right. Here's one that caught me off guard. An economic support use of the funds can be to rehire public sector staff to the pre-pandemic levels. And that's an eligible economic support use. So let's say that you laid off all your parks folks, right? I mean, I think we saw a lot of people, I know City of Portland let go of a lot of parks people right when this thing kicked off. And you want to hire back and get those people back on the payroll, you can do that. And then their salaries paid for by the program. Now, how long does that go? I don't think you're going to get it through 2026 because of that obligated language, but certainly it seems like you would be able to pay their payroll through December of 2024 under the guidance that we have here. So there's another eligible use of the funds, and something that honestly I didn't know was in the bill. I didn't expect that to come out. So that one kind of was a pleasant surprise for me. Certain uses are called out as being not allowed as economic support. And so it says like general infrastructure would generally not qualify, but it says, but if you were doing you were building affordable housing in one of these qualified census tracts, like we had talked about previously, and there was some infrastructure involved in that project, then that could be an eligible use for general infrastructure. We'll talk more about infrastructure later. It's its own category, but most of you probably have heard it doesn't include roads, right? And so I guess what they're kind of getting at here is, could I call road construction road infrastructure economic support? And generally the answer is going to be no. You cannot use this for payment of outstanding debt or fees or cost to issue new debt, right? They want this money to go into supporting people, not paying off old bills, even if you had accrued those bills trying to support people. You can't use it for settlement or judgments, and you cannot use it for replenishing rainy day or reserve funds. That is clear language in the guidance about that replenishing rainy day funds. So, that's a no-no. And then we'll talk some more about some of the other restrictions on the use of the funds. But for some reason, these restrictions showed up at this part of the guidance, kind of towards the end of the economic support category. All right. Premium pay for essential workers. You can give folks makeup pay for the fact that they worked during this pandemic, that they kind of put themselves on the line, that they showed up and they did the jobs that we needed people to do. That's an allowed use of the money. And so you can do premium pay up to $13 an hour to a maximum of $25,000 per worker. Generally, they're targeting like lower income folks, and so if you get pushed up over if that amount would push them up over the higher of the county or state medium annual wage, then you have to do some special justification. But some of the workers that this premium pay or hazard pay, some of the folks who are eligible are listed on here. I won't read all of them, but certainly staff at nursing homes, farm workers, janitors, truck drivers, public health and safety staff. So if I'm reading that, that's public safety staff. And so I think that, police and fire, I think probably would qualify for these generally, talk to your attorney. But I think that I had heard before that was kind of the intent of some of this language. Childcare workers, educators and school staff, and then social workers. Now, it also says, if you teleworked, you don't get the money. You had to be out there actually touching stuff is kind of how some of the language is written in the guidance. And so, if you're a grocery worker, you're there physically stocking shelves, yeah, you get it. If you happen to work for a grocery store, but you do finance on the back end and you did it from your house, no, you don't get it. So something to keep an eye on there.
And Mark, can I call something out here? The retrospective language, this is one of the few areas of the ARPA legislation where city can use its funds retroactively. The requirement is that the essential worker not have already received some sort of additional compensation. So if they were to have received some CRF funding, then he wouldn't be able to go retroactively in that situation.
Yeah, great point. And it also says it has to be additive. So you can't use it, you can't reduce their salary $5 and then use this to make up that $5. It has to all be added on to top of whatever they were making. All right, here's kind of here's a big one for us. All right, revenue replacement. So the way that the bill is designed, you have a whole lot of flexibility on how you use some of this money. And that is money to make up for revenues that you would have otherwise received, right? And so we lost money on gas tax, lodging tax, on parking fees, on park fees. We lost money on, just a slew of different things. And, it is, and we may lose some money on property taxes, right? If commercial vacancy is way up, we may see some values go down. We may lose some property tax revenue. So federal government recognized that, and they're going to let you basically, not 100% free reign, but you can use this money to pay for your general services pretty broadly. So to whatever extent you suffered revenue loss. So, and then there's some real, sticky requirements on how you calculate that loss. So first of all, it's calculated as a lump sum. It's across all areas. So you don't break out your gas tax and figure out what you lost there and then claim that. You got to look at the whole picture, all the included streams. You calculate the delta, the difference, and then that's how you figure it out. So what does it include? It includes taxes, state shared revenues, current charges, and miscellaneous general revenue. What doesn't it include? It does not include utility revenue, which is kind of curious. And does include utility revenue generally, trust revenues, correcting transactions, like you just are making up something on the books, sales of investments, and it doesn't include the CRF, right? So you got that big lump of money from the federal government, but you don't count that as money that you received for the purposes of determining what your revenue losses were from your taxes. This one is sticky, and we're still working on what is included and what's not included. And I'm sure that NLC is looking at this issue. One of the big ones that jumps out, system development charges, right? Those go into a specific fund for a specific purpose. Should those be included when you do the revenue calculation? Other ones, I think that liquor is included. I've seen a PowerPoint from somebody else that said maybe it wasn't, but I think that maybe that's just in the case of a city-owned liquor store, which some states have. I wonder a little bit about sewer, because the census guidelines kind of breaks out. It says water you don't include when you report your finances to census, but it says sewer you do include. And it's like water is a commodity that you're selling, where sewer is more just like a general service. I don't know if they're going to draw that distinction here or not. And then I worry about the fees that we have on water bills, right? So if somebody's not paying their water bill, they're also not paying any surcharges that you have on that water bill. And so I wonder whether or not those revenues are included, despite the fact that water utilities generally are not included. So those are issues that we don't have all the answers today, but those are things that I'm kind of flagging for you. How's the calculation work? So you compare a trend line, like they call it a counterfactual trend line. You compare it to what you actually received. And so if you kind of see this example, you take what you got in the last fiscal year prior to the pandemic. So that would have most likely been your budget that ended, June 30th of 2019. So you take that number and then you trend it forward, and you can either use 4.1% as your anticipated growth amount annually, or you can use an average of your last 3 years pre-COVID, whatever. Say you had gotten 6% growth actually, then you could include that. And then you trend that line up. You look at how much money you actually received at the end of the calendar year, and that difference is money that you get to use for revenue replacement that you can use for all these broad uses. And so there's a formula. I put this in here just to terrify people. You gotta do the parentheses first. I had to look this up. I pulled it was off a 6th grade math website. You do the parentheses first, then you do the brackets, then you do the braces. You do multiplication before addition. but you do this formula and it will tell you how much revenue you lost. And so you can immediately calculate for December 2020 what you lost, but it's going to be a while before you can calculate all the future years, right? You got to get to the end of the year to know. And so you're comparing calendar quarters to the fiscal year prior to the COVID. So what's allowed? Maintenance, construction, infrastructure, including roads, right? So this is kind of free money that you can use for whatever you want to use it for. And so, you know, some of the other things that it doesn't qualify as infrastructure to do roads in the general infrastructure category, which we'll get to, but it does qualify here. Cybersecurity, including computer hardware, environmental remediation, police and fire spending. So you can basically backfill your police budget. Uses not allowed. Payment of outstanding debt or fees or costs to issue new debt. So you can't use this to pay off old debt. Settlements or judgments, and replenishing rainy day or reserve funds. Those are all specifically called out as uses that are not allowed. So that's revenue replacement. More to come, I'm sure. And you know, we will be doing future calls, and we may do some specific calls on some of these topics like infrastructure. I think that one probably merits its own call. But certainly more to come on this. But this is kind of the money that you get to use to make up for what you guys have lost. And we didn't have that on CRF. That was not allowed use, revenue replacement, but here it is. So next up, water and sewer infrastructure. It says you have wide latitude to identify, you know, what projects you might want to do, but it is limited. We'll talk about broadband next, but you can only use this for water, sewer, and broadband. So no roads and no infrastructure outside of that in this category. Again, maybe you can do roads in a different category, but it doesn't count as infrastructure for the purposes of the bill. It says that, you know, they have some ideas on how you can prioritize, but I think that, you know, the city can apply additional criteria. I think that they really are giving you some pretty broad latitude here. The projects generally are going to align with what you can use for the Clean Water State Revolving Fund and the Drinking Water State Revolving Fund. So, you know, there's a little guidance there if you're trying to figure out whether your project qualifies or not. You can use it for wastewater is specifically called out, as is stormwater. Drinking water is called out. You can use it for replacement. You can use it for a new plant. You can use it for upgrades to your plant. You can use it for repairs to your plant. Very broad number of ways that you can use this to work on infrastructure. But again, we'll kind of have to get into the nitty gritty on some of this stuff. You know, one of the questions we got is, can I use it for infrastructure planning? And I assume you can. It doesn't say anywhere that you can't. And that seems to me to be part of an infrastructure project. But it was a question that somebody had, and certainly something to keep an eye out for. There is a little bit of additional reporting on infrastructure. They haven't determined what it looks like yet, but they say that they want you to think about, you know, prevailing wage. They want you to think about CBAs. They want you to think about, what was the other thing that they were kind of looking at? Basically, local hire, first source hiring. So hiring people from close to the community to do the work if possible, those kind of things. And so they'll want you to report back on that. I don't think it makes it ineligible if you didn't, and certainly all of our projects are going to be subject to prevailing wage. But just something you might think about is, you know, looking at that language and making sure that Treasury is going to like what you did with the money. But again, not a hard requirement by my read. Next up, broadband. This is another allowed use. The goal is to get adequate speeds and to get it to underserved households. And so these projects are expected to deliver symmetrical, which means same upload and download speed, 100 megabits per second. But you can do it for projects that are only going to have upload of 20 megabits per second if it is able to be scaled up later down the road. So that's something you'll have to look at. They want you to focus on locations that currently have really slow internet. So below 25 megabits per second down and 3 up. So, you know, that'll kind of limit it. But there's some, you know, flexibility in there. And sometimes if you're not quite hitting something, you can kind of justify it. So, and you know, when you're able to use the locations, but again, they give you some suggestions like focus on last mile and whatnot. So, you know, if you're thinking about broadband, certainly, you know, take a look at the guidance. And again, I think that this is something that we might do a separate call on is, you know, just this infrastructure question generally. So I expect that a lot of cities are going to be looking at infrastructure investments. I mean, that's a good way to make a generational investment that'll pay off for your folks this year, next year, and 20 years down the road, maybe. And certainly, if COVID's taught us anything, it's that the internet's really important. And, we want, especially, some of the more rural communities, we need to get those folks the resources that they need to do business in this new world. So next up, restrictions on use. So there are a couple of broad restrictions that were in the actual act. The Republicans, I'm guessing, said you can't use this for pensions, okay? And so they didn't want folks just to dump this into their PERS unfunded liability. The point is to help folks in the community. It's not to make up for the fact that government made bad decisions years ago. So you cannot use it for extraordinary pension payments. Now, Treasury did look at it and they said, if you can use these funds for payroll, you can make regular pension contributions. So you just can't do extraordinary payments on like unfunded liabilities. So normal scheduled payments that go along with somebody's check, those are okay, but not the big unfunded liabilities. I'm guessing again, the Democrats were like, well, we don't want to take this money and just use it for tax breaks. And so there's a requirement in there that you're not allowed to use the funds for tax breaks. And this one we're going to have to look at. It's got a lot of pages in the guidance. It's very extensive. And, I have a couple worries about how this could get interpreted. Say you guys do what the normal thing you do and you sign a business up for your enterprise zone program. Is that a tax break? Does that cause a problem for us? There are ways that you can mitigate it, right? Certainly in the guidance, you can fund it through another source. There are some other, options, but it's something that we need to keep an eye on. And depending on how it gets interpreted, it can be problematic. If the state does a tax cut and it trickles down to you, that doesn't count. But actions that you take, either administrative or, through your ordinances, those can count. And so I do worry a little bit about like our local option tax incentives, enterprise zone programs, affordable housing exemptions. So we're going to need to keep an eye on that. Administrative costs are allowed. Payroll for folks who are dealing with administering the program are generally allowed. I'm going to want to look a little bit more and make sure that contract attorneys are covered by that. We think that maybe you could cover them another way. So, if you were doing a program to do affordable housing and you had the attorney look at that program in specific, then maybe that's an affordable housing cost. And so it's okay over there. But the administrative costs are they describe it as being limited to payroll. And so we'll just want to be thoughtful about how, because I know a lot of you folks are going to need to talk to your contract attorneys, smaller cities in particular. And then there's a restriction against using it for matching for federal programs. And we'll see what that ends up looking like. I worry, about a new infrastructure package and will we be able to use these funds as the local match on that infrastructure package? Certainly it calls out that those two EPA programs, they're prohibited from using federal funds as the local match. And so that's another prohibition that you'll want to keep your eye on. So outstanding issues, we talked about some of these. What happens if a business repays a loan? Where is that money free for the city to use now, or do you have to put it back into an eligible use? There are restrictions on using these funds to finance new debt. I think that what's going to happen on a lot of these infrastructure projects is that you're going to use this to pay for a portion of the project, but you may still have to bond. These projects are so expensive. This may not get out of having to do bonding. And we just want to make sure that the language plays nice with that reality. And I expect that it will. Certainly, you couldn't use this to pay for your bond fees, right? That the bond attorney is going to charge you or any of those fees. That'd be a no-no. But hopefully you can use this to reduce the amount that you would otherwise have to bond. We talked about the local match issue. We talked about the tax cut issue. So those are some outstanding issues. Here's some resources for you. And okay, I'm pretty happy with my time here. We got just a half an hour for questions. Here's some resources for you. Again, these are links and you'll be able to click on them. But the number one place, I'm going to that Treasury website every day or two now. I just want to see if they put anything else new up. It just makes me feel comfortable to look at it and know that it's the same. So, I go to that website all the time, and whoever is administering this program for you needs to find their way to that website and get comfortable with everything that's on there. Certainly LOC, we've got our resource hub. Julie does great work on that, keeping that thing up to date. And so, as things change, which they always are, we do our best to get it updated in a day or two. So right now, everything on there I think is current. And, there are links there. You can get to that old Excel document that showed you what that one committee thought your allocation was going to be, that we no longer know whether it's reliable or not. If you want to find that number, it's on there. And so you can get to that. And then the National League of Cities, obviously, I mean, we owe them a debt of gratitude. I mean, talk about getting your money's worth on membership, but they're also working on some guidance documents. And so those will be posted there. I've got some things I'd like to do. I would like to do a table of contents for the interim administrative rule. You'll probably see that pop up on our website. Certainly, I think down the road we might do I don't want to overcommit, but I think that a lot of cities would benefit from some kind of model business assistance program or something like that. So we might look at, what we can provide along those lines. And as we get that stuff put together, we'll put it up there. Certainly we'll get you the link on there for the NLC talk that you missed today because you were with me. But we'll put up our PowerPoint from this presentation on there. So good to always go to the LOC website and keep an eye on things. We also try and keep articles coming out in the bulletin. So if you're not getting the bulletin every Friday, get it, because there's, critical updates, then sometimes that's the only place that you would know that had happened. All right, question time. So some of you did submit questions in advance, which I really appreciate. And I think I will run through those first. So first up, I'm gonna start with one I don't know the answer to, because I'm sure that we're going to see more of those as we kind of move along. But so here's one from Tim Hall, from Mayor from Garibaldi. So my small city has a desperate need for new fire and police vehicles, one each. Can some of these funds be used to acquire them? I don't know. That's a good one. So nowhere in the guidance does it specifically mention vehicles, but certainly there are talks about public safety. You may have better luck on the fire side, particularly if it was something that's used for medical emergencies. And, and so you can make a good argument that this is COVID related and we need to be able to respond to the public health side of the crisis. There might be something there. This is going to be one of the first ones where I hit you with the, you're going to want to talk to your attorney. And this is something that I'll think about. Certainly, if we go out and we start buying a bunch of trucks for our public works departments, I don't know how great that's going to look for us. I know that those needs are real, but it could be that you're able to free up funds, through your general fund, and so we can use this for revenue backfill, and then you'll have some extra general fund, and maybe make a decision that way. So there's lots of ways to look at the color of money, they call it, and so we'll see if anything comes out along the lines of vehicles. I think what I can tell you is that if you do decide that that's an eligible use and you get to buy it, then you get to keep it. There's some language in there that if you buy equipment that you get to hold on to it. So that was one question. Here's another question. This is from Rob, City Administrator in Dundee. If we use ARP to offset the Highway Trust Fund distributions, how do we measure the decline in revenue? And again, it's a lump sum. So your gas tax revenue is lumped in with all your property taxes, is lumped in with all the other state shared revenues like liquor that you get. You do that formula where you create that line and measure what your actuals were against that line. And that's how you'll get the total picture for revenue loss. So it is not fund by fund. Is purchasing telemetry software to a PC host of software, hiring a consultant to install and set up the software for our water distribution system considered infrastructure? Certainly, they talk about investments for green infrastructure. They talk about investments for resiliency. They talk about investments for cybersecurity of infrastructure in this guidance. So I would look to that area, but I think that it could be likely that you'd be able to make a case. I don't want to get too far out in front of it. Would it be something that you'd be able to qualify for one of those programs, the programs that were mentioned? I don't know that you could. So, but certainly it seems like something that could be possible, and it's definitely worth some consideration. Is use of ARP for water and sewer infrastructure restricted to new improvements, or can it rehabilitate? No, it's not restricted. You can do replacement of bad pipe. It says if your sanitary system is leaking into waterways, that's certainly an allowed use. And anything that ensures clean drinking water for residents. Water is key for health, is what the guidance talks about. And so replacement of pipe is certainly okay. Couple questions here from Michael, Finance Director out of Newport. We understand construction costs can be covered with ARPA, but how about the pre-design and design stages? Any guidance? First of all, is this a project you've started yet? And do you already have that work done? If so, no, you can't use this. It's only forward-looking, right, from March 3rd. But if it is something you haven't done yet and you want to go out and do some work on a project, I don't see any restriction in the guidance from using this for, engineering type of work. So to me, that's part of an infrastructure project. I know it generally qualifies for a lot of these programs. You might look at that as well. Those two, the clean water program, the drinking water program that are mentioned in the guidance. So I suspect that is okay. Next up, the replacement of lost revenue aspect. I believe I heard them say utility revenue is excluded. And again, like we talked about, yeah, generally it is. And but I do have a question about sanitary sewer. But there are other ways to address issues that your water system is having, and that could be helping out to pay for an infrastructure cost that that you're going to have going forward, or utility assistance. So if you pay off someone's back utility bill who's not been paying, then certainly that's going to indirectly benefit your water system. So what can you not make up for? The fact that one factory just completely shut down and they're not using water, you're not gonna be able to make up for that at all. But you can help out individuals with their certainly with their water bills and do utility assistance. Infrastructure cost replacement are not covered by ARPA. Have you heard anything on this? And I think it is. I think that certainly water and sewer, and I bet what you're talking about is transportation. And generally transportation is not allowed as infrastructure, but there is some ability to use your revenue replacement money for transportation infrastructure. So you will have some ability to whatever extent your city has lost revenue since the pandemic started. A couple more, and these came from Happy Valley, and I think it was Ben in Happy Valley shared these. So it says on page 60 of the Treasury guidance, interesting that roads are eligible as long as it's PAYGO, counter to a lot of what I've heard. And yeah, you will have heard, can't use it for transportation infrastructure. But again, in that revenue replacement category, that is an allowed use. And especially to do like road maintenance is certainly something that you can use it for. And then here's another one that I don't know the answer to. Page 120 outlined rehiring staff back to pre-pandemic levels. How long can we pay their salary? Again, I suspect it's till the end of December 2024. If these employees were furloughed, not laid off, are we still able to use the funds to bring them back to pre-pandemic status? And I think that the city is paying their salary there, even though they're not working, if I understand it correctly. And that's got to be an attorney question. You got to look at what the definition of rehire is. Because that was something that was, I think that's the word that they used in the guidance. So that one's going to be one for the attorneys. And, and anytime, I don't know how comfortable you are sharing your legal advice, but anytime you want to share with me something that you've heard from your attorney, that information is always helpful. I'll tell folks, well, I can't give you any legal advice, but I do know that at least one city's looked at this and their attorney felt like this was fine. And you may have heard me say something like that on the CRF. So those are the questions that were submitted in advance. If there were any other ones, sorry if I missed them. I don't think I did though. I think that's all the questions we got in advance. So now let's go. And I cannot see the chat, unfortunately. I think Julie, are you gonna read some questions for me if there are questions in the chat?
Yeah, we have several came through in the chat. So we'll start with the first. Do individual cities need to apply for these funds, or do they just receive and track them?
So apply is a strange word. It implies that that they have some discretion as to whether or not you give it to them. You do have to register, I would say. And so if you're a metro city over 50,000 or Mighty Lebanon, you will go directly to the Treasury and sign up there. And you can see a list of those cities on the Treasury website. If you're not, if you're one of the smaller cities, we will have a process. I do not know what it is. I cannot even tell you which agency it is. They're not sure if DAS or OBDD, Business Oregon, is going to do it. I think it'll probably be DAS though, and it'll be more of a registration. Only thing you can do today is get your DUNS number in order. If you're a smaller city, you will need that number, and you should have gotten that in order for CRF. And so there'll come a time you'll have to log in, you'll have to sign up, you'll probably have to sign something. You'll have to make sure that your grant is not bigger than 75% of your last budget, and then you'll just get the funds. So it's not really an application exactly, but you will have to register, and I'm sure you'll have to sign something.
And Mark, I'm gonna just read straight from the FAQ here. In addition to that, they say that active registration with the System for Award Management, SAM, is required. And they also want a bank account enabled for automated clearinghouse, ACH direct deposit. So just some additional sort of administrative steps you need to take there.
Yeah, and that's great. And I'm not 100% that smaller cities have to have a SAMS number. The Treasury website didn't say you did, but
I don't even know what it is.
You have it all the way already for CRF, and the state may require it. And certainly you're going to have a bank account where it can go to. So yeah, but those, those are some additional things. That's great. Julie.
With Oregon's property tax receipts being heavily weighted to November and December, the calculation makes it appear that we didn't have a general revenue loss. So, not sure if that's a question or just a statement.
So, okay, that's a hard one to wrap my head around. And somebody has kind of said something similar, but your prior fiscal year would have included one full set of property tax, July 1 to June 30th. And then when you do the calendar year calculation, similarly, it seems like you should have one full year of property tax receipts reflected. It's going to be a split year, which is not smart, but that's how they did it. So that's interesting and something to think about. And I had another finance guy tell me that he thought it actually worked out favorably for them, the way that they did it. But, yeah, that's interesting, and we'll see.
The question about the formula, and ask if someone could share an example with the formula.
Nobody's recording this, right? But we are. I don't count on this, okay? But basically what you're doing is you are starting in the middle. And so you are going to do, first of all, growth adjustment, right? So you are talking about your previous fiscal year that ended June 30th of 19, and you're comparing that to revenues that received in the calendar year that ends December 31st of 2020. And so how much appreciation do you have there of the fiscal year 19 money? You have 18 months, right? So you're going to take 1 times either that 4.1% growth factor or the whatever your actual growth over 3-year average was, and you're going to run an exponent, right? So it will be 1.4 to the 1.5 power, and that is your growth adjustment. You'll take that times your base year revenue, and then you'll subtract out whatever your actual revenue was for that end of December 2020, and that would be your revenue loss for that December 2020 calendar year. So I hope that helps. But the bottom line is, it's 18 months, so you're getting 1.5 years of appreciation, and this is what we have finance people for. So they can do this stuff in their sleep. I bet.
Okay. How about the state revenue sharing for highway taxes? Those were way down in 2020.
So that'll help, right? That'll bring down your revenues. Now, if liquor taxes get included, those were way up. People weren't driving, but they sure as heck were day drinking. And so, you know, that'll bring your revenues up a little bit. They'll offset. But generally, I think that we will see that we did have revenue losses. I know Salem will, because state workers aren't parking and it's killing them. I know, you know, I bet Seaside does, because the tourism was hurt for so long there and they were not getting their lodging tax. So we'll see. Some folks maybe, you know, it's not negative. If you ended up that you did great, then you don't get to use this revenue backfill. But I think most people will see something here, and some of the cities that have been looking at it think it's pretty significant. So.
And Mark, I actually have a question for you. So with the transfers between state and local government, the state shared revenues, those are typically going to be included in the general revenue definition, but they exclude federal intergovernmental transfers. And do you, off the top of your head, are there any types of transfers that you think you know, meet that definition? Of what would a federal intergovernmental transfer be?
So the big one is going to be CRF, right? That's the one that would have really shown you to have a great budget, was the coronavirus relief fund money. So that'll be one. And then secure rural schools, that seems like another one that, you know, a lot of smaller communities, they get some money to make up for the fact that timber is not doing what it used to do. And so the federal government gives them some money every year. So that might be another one, but I think it's kind of along those lines. Maybe FEMA reimbursements might be another one. So I'm sure there are several things that could otherwise hurt this calculation for you, but won't because of that guidance.
Next question, the American Jobs Plan Act is more infrastructure focused. So how do cities make sure they don't spend ARPA funds on projects that may be eligible for the AJP Act dollars?
Okay, great question. And, you know, and I'll even go a little further. There's going to be money coming for utility assistance from other sources. There's going to be money coming for housing, dedicated funds through ARPA that'll go out through Housing and Community Services. You know, the state always does their, you know, lottery bonding for the Special Public Works Fund. So, and hopefully, fingers crossed, we get an infrastructure package, the American Jobs Plan. And so I would definitely be thinking about other sources of funds, you know, as I think about how to use this money. Why spend my money when I can spend somebody else's money? And so I think that that's just something great that people need to be thinking about. Now, on ARPA, or on the infrastructure package, I will say, you know, how many projects do you have that are ready? You know, the last time they did a huge infrastructure package, Oregon ended up blowing the vast majority of it on paving because nobody had anything that was actually shovel ready when the infrastructure package hit. And so maybe you need to do some planning, engineering now, so that if there is an infrastructure package, you'll be positioned to get some of those dollars. So I'll kind of throw that back at you, but I think that that's a great thing that people should be thinking about.
After lost revenue is calculated, do the expenses have to be documented? It seems like prior lost revenues, i.e. FY20 revenues, that are collected in the current fiscal year via ARP would supplant the current fiscal year budget.
So does it have to be tracked? I mean, I would just plan to keep great records. You know, your calculations all need to be supported. And I don't know if that really gets at what the question was there. And if someone wants to hop off of mute and hit me with a little bit different wording on the question, I'm happy to try and take it. But generally, yeah, you gotta, I mean, I hear what you're saying about as revenues kind of go on over time. Like you are looking at 4 points in time. December 31st, 2020, what did you lost? 2021, 2022, 2023. As of each of those 4 points of money, as of each of those 4 points in time, compared to that trended number, what was the loss? What would you have expected your revenues to be? based off of either that 4.1% growth rate or your actual growth rate for the 3 years before the pandemic, what would you have expected your revenues to have grown to, and what did they actually end up being? And that difference, that's money that you have pretty free reign over with some restrictions.
Okay, the extra pay for essential workers, does that apply to the Public Works Department that has been working the entire time?
I think it would. Certainly, you know, those guys are, to whatever extent they're in the plant, keeping the, water clean and the sewers working. I think that it would, and I think may even be, they may even be called out. I went past it. Janitors and sanitation workers, that's not really the same. I feel like they may have even been called out at, someplace. So I think that, and again, including but not limited to, I think you could make a great argument, if those gentlemen were showing up for work and taking care of stuff. And I know some of those guys had to work crazy hours because they've only got a couple people and somebody gets COVID. So certainly something you can look at. Oops.
So basically, we can't do separate categories of revenues that were down or even revenues by fund. We have to lump all general non-utility revenues into one calculation.
Correct. And so, Julie, my screen share just stopped. Are we like good view-wise still?
Yeah.
I think we're done with the
I see it.
PowerPoint anyway. Okay.
Yeah.
Okay, let's just go on.
Is there any mention of excluding marijuana tax revenue in the calculation since it is not legal at the federal level?
Wow, that's a good one. I'll have to jot down. I have not heard it, so that's interesting. Because it certainly, there's another one that, well, no, that's not true. I think we actually want to include marijuana revenue because we're going to get taken for a ride on the Measure 110 reduction that we're going to get. You're going to see your state share of marijuana revenue go down by 72%. And that actually, and it says right in there that even if you know that a particular revenue source decreased because of something that was not COVID related, for administrative ease, we're just going to lump it all and consider it all to be COVID. And that's the perfect example, right? There's a law change that takes away that money from us, but it still counts as reduced revenue. So I may not raise that issue at Treasury. I think that we want to go ahead and count those state shared revenues.
I think one more. Can we use ARP to fund FTEs on a mobile crisis unit, mental health professional, and a medic?
I don't know. That's a good one, right? I think that you have a much better argument if you were in a qualified census tract or if you were, kind of targeting folks who are, disproportionately affected by the pandemic. So maybe you're targeting homeless folks, for instance, and that maybe falls in line with like a homelessness services. So there could be something there. Payroll certainly is allowed, but the unit needs to be dedicated to COVID. And if what they're doing a lot of is, say, substance abuse issues, but again, substance abuse is another qualified use. So there are a number of ways, right, that you are going to be able to take some of your ideas and justify them under the guidance. And it may be that it doesn't fall into this bucket over here and you instead put it in this other bucket. So I don't know if it would necessarily fall straight into the payroll category, but certainly I think it could be something that falls under either the public health or the economic support for individuals category. So I think that, that would definitely be something that would be worth running down. And I will give a shout out to those attorneys again.
And I'll just add that the interim final rule calls that out specifically, behavioral health care. So not just mental health treatment, but substance abuse treatment, behavioral health services. Those are the sorts of things that, particularly in an area that has been disproportionately impacted by the pandemic, it'll definitely qualify. Okay,
and I'm actually able to access the chat now, and I see that Anella and Janet are weighing in on the marijuana stuff. And yeah, just like liquor, we went gangbusters for the 2020 revenues. But again, remember that we might suffer a little bit on that 2020 calculation, but you're also going to be doing a 2021, 2022, 2023 calculation. And there, those revenues will have just bottomed out. Your local marijuana tax is probably doing pretty good though. So did that get through all the chat questions?
Yeah,
terrific.
I believe that was all of them.
All right, we've got 5 minutes. If anybody else wants to throw one out, otherwise I will let you have a break before your next meeting. I'm off to testify on a bill, so I definitely have a hard stop. We've got one more chat. Oh, okay, well, thank you guys for the thanks. And thank you to, Jim for joining, getting us started off. Thanks to Colton for being here and for all the work he's going to suffer through here as we all kind of suffer through administering these funds. It's such a great opportunity, but I know it's a lot of weight on folks' shoulders, certainly. But I know that you guys will do a good job. I know how thoughtful cities are on when they have an opportunity to use some resources, and this is just an unprecedented opportunity for us. Finally, big thank you to Julie for keeping the technology going for us. As always, I felt like this call went really smoothly. And, as much as I'm looking forward to getting back in the office and getting into some coffee shops and doing meetings at the legislature, this was a great opportunity to see a lot of you. And certainly we would not have gotten this kind of attendance had we all had to travel. So we'll do more. There's going to be so much more to come on this. We gave you our best shot today, right? But things will change. Some of what I told you is going to end up being not true. And that is just going to be the reality that we're going to be living through. This is a moving target that we've got. And again, sign up for the bulletin. We're going to let you know when new guidance comes out. Keep an eye on the Treasury website and read those documents and work with your attorney, and we will all get through this, and we will do some really great stuff for our cities. So thanks so much, guys. Have a terrific afternoon.
Thank you.